Hi, this is Mark with your analysis for the week commencing the 27th of March. Extremely tricky markets last week. We are living through unusual, extraordinary times. What with the earthquakes in New Zealand and then the major earthquake in Japan followed by the tsunami, the problems in Libya and the Arab world, there is so much going on at the moment fundamentally that it can be difficult to technically trade. And I said to you last week that the yen pairs, particularly the dollar yen, I would leave alone because on top of all of this, G7 and the Bank of Japan have been intervening to weaken the Japanese currency. And we had an extreme situation on Friday morning, overnight through the Asian session. The yen moved 8 pips. And this is probably because every time there is an attempt to strengthen the yen, the Bank of Japan dives straight in to stop it moving. However, what is now becoming interesting is the Aussie dollar. The Aussie dollar broke and closed above a recent major high on Friday. Now, frustratingly, it only did it by a couple of pips, but this is a major move. And if we have a look here on the weekly chart, you can see this is an engulfing candle, a bullish engulfing candle. And the weekly Bollinger Band has opened and lots of things to suggest here now that the Aussie dollar is going to plough on ahead. If it is to do so, then I would be interested to long, but only if we get a pullback. And because it only closed a couple of pips above, then I'm a little bit wary with the pair. But the major areas of interest, let's just put the fib on here. This is a daily fib. Major areas of interest is 10100 for me, which is down here. Definitely if it gets down to 100 again, 10020, I would definitely look to long. But this would be my preferred area. However, it may only get here, once again, at 1.019, 1.0200 area. I'm more interested in this. This is the Aussie dollar yen. Now the Aussie dollar yen, if the Aussie dollar continues to go up, and if the banks of Japan and the G7 countries continuing to want to weaken the yen, then this could well be the trade of the week. Frustratingly, it did not close above 83.50 here on Friday. Had it done so, then I would immediately have been all over this. The way to play this now is this. For me, I am only interested to long. I'm not interested to short, but 83.50 is the area. If it's going to turn back down, this is where it will do it. To long, I need price to break and close above 83.50. If I was to do this on a 4-hour chart, I also want it to break and close above 83.75, these areas here, because there's a tendency on the 4-hour it may just get here and turn back down. So your best ways to play it are, if you're on a daily, wait for this to break and close above 83.50 with the view for a pullback and then a move up. And again, it's one of those pairs. Let's have a look on the monthly for this pair. This is the monthly candle. Now it's not closed as yet and therefore it's not printed and therefore not confirmed, but if this candle closes anything like it is now, or if this is to move further up, this is a pin bar reversal candle, and this is hugely significant because if it closes above here, which is the monthly 200, with this candle formation, then those who simply trade candlesticks will be looking to be all over this for a long. And again, on the monthly, the Bollinger is wide open. So my potential trade of the week then is this Aussie dollar yen. The final thing is if it pulls back down again to 82 and possibly only as far as this 55 EMA, 82.30 area, then I would definitely be interested to long. As I say, these are the main areas. Now if it can break this 83.50, the next possible area up here is around 84.45, and if it gets past there, the next high going back last year was up to 8800. So there is a potential with the Bollingers opening and nothing being in the way up here for this to be a big move. This is the euro yen. Now the euro yen on the monthly, we were looking for a triangle breakout we've got. We also have a potential pin bar candle and a 5/8 cross and MACD diversions and stocks pointing upwards. However, I would be more wary to trade this one because the euro is going through a period at the moment where Trichet is playing games with the press in terms of trying to talk up the euro and confirming that they're still looking to raise interest rates this month. And yet, on the other hand, the Portuguese government collapsed on Friday. because their parliament failed to agree to their austerity package, and the Portuguese bailout appears to be getting closer and closer, and many Spanish banks are highly exposed to Portugal as well. So this debt scenario in Europe is not going to go away, and the meeting that they had Thursday, Friday of last week discussed about raising extra monies for bailouts, not specifically mentioning Portugal, but it really seems to be a matter of time now before the Euroland goes into crisis again, and at which point the euro could plunge. So although this one has broken higher, I do prefer the Aussie dollar at the moment. If the euro yen was to pull back down, say all the way to 112, I would definitely be interested, and these are the areas on the way down. But for reasons I've just explained, I would be more interested in that Aussie dollar yen. This is the euro on a weekly. Now last week I was saying we were looking for a pullback, and I suggested 140 was the best place, but it might only get to 140.50. And it actually got to 140.51, I think it was. So it got very close. But here again, we are trapped in this zone. We are at 140 is hugely important, and many people will be looking to long here, and we are in an uptrend, and that therefore will be my main area to consider. But it will struggle to break this upper area up here. This is the euro on the daily chart. So 140 is the huge area. However, 5-8 cross forming, stochastics rolling over, MACD divergence and lots of things, it could be that it breaks. Look tomorrow, look for a 4-hour bounce back up off 140. If you're going to trade off the daily, then you would wait for the bounce and or a breakout. And a breakdown the other way, you would need to wait for price to close below 140 and look for a pullback the day after with a view to a short. I am more interested in the pound this week. This is the pound on a weekly chart, and I've shown you in recent weeks we've now had 4, 5, 6, 7, 8, 9 or 10 weeks when price has been simply stuck here. And I was saying to you last week people would be looking to short at 160.30. It did go a little bit further past, but to long at 160, and this did happen on Friday afternoon. So at the moment these are still the major areas that we will be looking to take trades. Once again, as with the euro, it could be that 160 finally breaks. You're going to have to look at market open and do what the charts tell you. If it does break, then there is plenty of room here for this to fall. And what I have been looking at longer term is for a pullback to 158 with a view to a long. So areas, main areas, potential longs here. Counter trend traders will be looking for shorts around 163.40 with their stops above the recent high. There is British news this week. What I do this week, this is NFP week. What I do with NFP week is try to make my money as early in the week as possible. I never trade the NFP Friday anyway because it's too silly. And tomorrow is a very slow news day, and there is very little scheduled British news tomorrow. So we could have a potential, there's nothing as a major catalyst to drive it through areas. So this is the area for me. Counter trend traders again up here. This is the Swissy. Now, the dollar Swissy has pulled back to within a pip or two this area that we've had on here for weeks. Why? Because it's a major area of previous support and it's coming back up to it now, so therefore it's resistance. If the Swissy continues to go up, then we would be realistically expect, because of correlation, for the euro to come back down. So again, watch both of these pairs at the same time. See what they do when they hit these major areas. As the euro comes down to 140 and the Swissy gets up to 92.30, see what they do. And if it starts to turn down, you would expect the euro to go up and vice versa. Euro GBP, saying last week, we were looking here for a potential pullback to 8,700. And I was saying that until it breaks 8,800 here, 78.6 on a weekly, then for me this is still in a downtrend. This is messy, and because of the fact that we've got this ongoing euro situation, I will be very wary with the euro pound at the moment. This is a CAD. CAD last week bounced 3 or 4 times off the 50% fib area. We were looking for a potential pullback further up in the week, but it never got there. Again, once again, this is the major area tomorrow, 98.20 area. If I would only be interested to short this. I have no interest whatsoever in longing it. The CAD has been in a downtrend now going back for years. If it does do a major shoot up next week for some reason, then you would definitely be looking to short at 1.00 once more. So it has been tricky. I suspect this week, hopefully, is going to be a little easier. Personally, I'm going to be trading off daily and 4-hour charts because smaller time frames, things are just bouncing around up and down. Let's have a great week together. Enjoy.